show you what happens when you are changing your company with respect to your income tax returns. See, usually when we change a company, we are expecting a good hike, and that is the probable reason that we would have changed our company. But this dream of getting that extra money gets shattered when we learn while filing our income tax returns that we need to pay a huge amount of taxes. And not only taxes, you will be shocked that you will also be paying interest. Now, my dear friends, if you don't want to fall into this trap of paying huge amount of unexpected taxes along with interest while filing your income tax returns, then please do watch this video till the end so that whenever next time you are changing your company, you are on a safer side, not ending up paying an unexpected huge amount as taxes and killing some of your dreams. So let us see. Now suppose that your salary in company 1 is say 8 lakh rupees and in company 2 you have received 4 lakh rupees. Now these 8 lakh rupees is for a duration of say 8 months of period of that particular financial year, and these 4 lakh rupees is for a period of 4 months of that particular financial year. Okay, so this 8 months and 4 months completes your entire financial year of 12 months. And your total salary of these two companies, that is your total salary for that particular financial year, comes to rupees 12 lakh. Okay. Now suppose that you have received some leave encashment of say 50,000 and gratuity of 70,000 in your company 1. So your gross salary after exemptions of section 10 comes to be rupees 6,80,000 in company 1. And for company 2, it is rupees 4 lakhs, which adds up to rupees 10 lakhs 80,000 in total for that particular financial year. Now, your company 1 has done your standard deduction of rupees 50,000 and professional taxes of rupees 1600, and your company 2 has done standard deduction of rupees 50,000 and your professional taxes of rupees 1200. Now, see, here is one problem. This 50,000 standard deduction is for one particular financial year. So ideally, if your company 1 has taken your standard deduction of 50,000, then your company 2 should not have taken. But why company 2 has taken, that is none of your fault. My dear friends, please do understand, it is your fault. Why? Because you have not informed your company 2 about your salary of company 1, about your deductions of company 1, and about your TDS already deducted in company 1. So now since your company 2 is totally unaware of all these things, what your company 2 is doing is, it is taking your 4 lakh as your income of the entire financial year, and that is the reason they are taking your standard deduction of 50,000, they are taking your professional taxes, and your net taxable salary for your company 2 comes to rupees 83,800, which is below your basic exemption limit of rupees 2,50,000. So there would be no TDS deducted in your company 2. Okay, so now moving on, say you have some savings interest from your savings account, which is rupees 8,000. I am just assuming the amount. Okay, so these you can claim as a deduction later on. First of all, it is added to your income. Then you have interest on home loan payment of rupees 60,000, for which you have submitted proofs in your company. So this deduction has been taken. Same way, you have submitted proofs in your company 2 for your home loan deduction of rupees 90,000 interest. Now you have also furnished your proofs for your section 80C, section 80D, section DDA. So your company 1 has taken this deduction for 80C as 1,50,000, for section 80D as 25,000, and for 80TTA as 8,000. Same way, your company 2 has also taken all these deductions because you have furnished the proofs for the same. Now your total deductions for company 1 comes to rupees 1,83,000 and also same for company 2. Now since you have not intimated company 2 about company 1's deductions and salary and TDS, again your company 2 is taking all the same deductions which should not have been taken, and that is the reason you are going to end up paying taxes. Because this amount is going to be added back to your income, because ideally this should not have been taken as a deduction. Now your net taxable salary for your company 1 is rupees 3,93,400 and rupees 83,800. Okay. Now your TDS deducted by company 1 was rupees 10,000, and since company 2 has not deducted any TDS, but ideally it should have done because it was not aware about your company 1 details, so it has not deducted any taxes. Now here, your tax payable, here you are not getting any tax payable, but you are getting a refund of rupees 2,830. Now see, if you go simply by adding up both the incomes, then you will end up paying huge amount of taxes, whereas you were expecting a huge amount of refund. Okay, but why you are going to end up paying taxes? Because what was done was there was a simple addition of these two amounts. Okay, and addition is okay when it is concerned to your income, to your leave encashment, to your gratuity, but when it comes to your standard deduction, this will give you a wrong calculation. This should not be 1 lakh, it should be 50,000 only. Again, your professional tax should not be more than 2,400. Then, so your net salary comes to be 10,27,600 and not 9,77,200. Okay, so on this difference you will be paying taxes. Again, there are differences. Okay, so see you can see the differences, which these amounts will be added to your salary if you are going by these calculations. Okay, okay, I'm sorry. Okay, so see, your actual calculation will be this way: total of your these two salaries. Okay, then your gratuity and leave encashment, those you will get exemptions in section 10. So your total gross salary after exemption comes to rupees 10,80,000. Now you will have a standard deduction of 50,000, professional taxes of 2,400. So your net salary comes to rupees 27,600. Then you have income from other sources, that is your savings account interest income, which is rupees 8,000, and you have this 90,000 as your interest payment of your home loan. So now we will see the deductions. So the eligible deductions for section 80C is say 1,50,000. It is 1,50,000. Then for section D it is 25,000. Then for section 80 double TA, because your 8,000 interest income is less than rupees 10,000, which is the eligible limit. So these also you will get an entire deduction. So now your total deductions are not rupees 3,66,000, but it is only rupees 1,83,000. Okay. So your rupees 1,83,000, this which was wrongly taken as a deduction will be added to your income, and now taxes will be calculated. So instead of your this refund, now you are getting a tax payable of rupees 1,25,000. Okay. So see how your taxes are calculated. See, here you have paid TDS of rupees 10,000. So 10,000 TDS will be considered while getting your total tax liability. So your total tax liability as per calculations comes to rupees 1,12,500. Okay, out of which 10,000 you have already paid as TDS. So now your tax payable will be rupees 1,25,000. Okay, so now you understand that why this thing happens. Okay, you end up, and not only this taxes, Apart from this tax of rupees 1,25,000, you will also be liable to pay interest amount. Why interest amount? Because you are supposed to pay this taxes by the end of March month of that particular financial year. But now, since this payment was not done by that due date, you are supposed to pay interest also. So, whenever next time you are changing your company, please ensure that you inform your company 2 or your company 3 about your previous companies. Also, you make sure that you contact your CA or your income tax preparer priorly in the month of June or in the month of January or February, so that you don't end up paying the interest amount, and all your taxes are done by the due dates as they should have been done. Also, if you are filing your returns on your own, then make sure that you do a self assessment as per these calculations, as per the applicable income tax laws, and you pay a self assessment tax before 31st March of that particular financial year, so as to avoid these unexpected huge amounts when you are going to file your income tax returns, and also an interest amount on top of that. Okay, so that's all for this video. If you have any doubts, if you don't understand a particular thing in this video, or you want me to make a video on any such similar topics, or you have any further clarifications or any questions, then please don't hesitate to write them in the comments below. I'll be happy to help you all. This is Ketna Shah signing off for now. Please await my more content, and if you want to see more contents like these, then please don't forget to subscribe to my channel if you have not already subscribed to my channel. Also, I'm sorry. Also, after subscribing, please ensure that you hit the bell icon so that you don't miss out any of such contents, and keep saving your taxes and enjoy spending your money. Thank you.
If you like this video, please give it a big thumbs up and share it with your friends and family. Also, do subscribe. The link is given below in the description box. And after subscribing, please click so that you are the first one to receive my latest videos. Thank you.